and good afternoon to everybody. My name is Hassan Saeed and I'll be your host for today. I welcome you all to this webinar marking the launch of the Karandaaz Financial Inclusion Survey 2024. Today's webinar has been organized by Karandaaz Pakistan. It is a non-for-profit company funded by the Gates Foundation. We will begin with opening remarks by Mr. Waqasul Hassan, who is the CEO of Karandaaz, and a keynote address by Syed Samar Hasnan, who is the Executive Director for Digital Financial Inclusion for the State Bank of Pakistan. During the course of this webinar, we'll also be sharing findings from the research study conducted by Karandaaz. We'll also have a series of panel discussions on a range of related topics. Lastly, we will conclude the webinar with closing remarks by Carol Benson, board member Karandaaz. To begin the day's proceedings, I will now like to welcome Mr. Waqasul Hassan, CEO Karandaaz. Mr. Hassan has a rich experience in designing and implementing a wide range of development finance programs on infrastructure finance, public-private partnerships, climate finance, MSME finance, credit guarantees, and digital finance. He has also served as an advisor on financial sector projects in Afghanistan, Ukraine, Bangladesh, Jordan, and the UK. Mr. Waqas, I would now ask you to present the opening remarks. Waqas, आपका mic थोड़ा mute है. Can you please unmute it? Thank you.
Sorry.
No worries.
Thank you, Hassan. Thank you very much. Dear Syed Samar Hasnan Saab, Executive Director, State Bank of Pakistan, Ms. Carol Benson, Advisor to Karandaaz Board, Mr. Steve Rasmussen, former CEO CGAP, and I must say former CEO Karandaaz too, distinguished panelists, esteemed colleagues and attendees, good afternoon and Assalamu Alaikum. It is my great pleasure to welcome you all to the launch of this 2024 edition of the Karandaaz Financial Inclusion Survey. This is Pakistan's first and only nationwide demand-side survey that offers practical and data-driven insights on the state of financial inclusion in Pakistan. This year's wave marks a significant milestone as we complete a decade of measuring and understanding financial inclusion trends across the country. At Karandaaz, our mission is simple but ambitious: to drive financial inclusion for individuals and small businesses by leveraging technology, innovation, and evidence-based insights. For us, financial inclusion is not just a metric. It's a means to empower people, expand economic opportunity, and build resilience in the face of uncertainty. Empirical evidence suggests that a 1% rise in financial inclusion increases economic growth by 0.65% in high-income countries, 0.52% in middle-income countries, and 0.39% in low-income countries. These numbers underscore the transformative potential of inclusive finance for national development. This is why Karandaaz Financial Inclusion Survey, now in its 8th iteration, is so vital. It presents a picture of not only where we stand, but also how far we have come and what road lies ahead. Between 2014 and 2024, we have made decent strides. The financial inclusion in Pakistan rose from just 7% to 35%, representing a 5-fold increase. Most of this growth has come from mobile money, whose adoption jumped from less than 1% in 2014 to 30% now in 2024. This growth is not just about numbers, it is about meaningful change. As I talk about the developments in the digital financial landscape of the country, no discussion is complete without mentioning RAST now. I must congratulate State Bank of Pakistan for the journey that RAST is doing. RAST is emerging as a foundational infrastructure piece for cashless Pakistan. Samar Saab would share the latest number, but I would say it has more than 43 million unique IDs and transacting over 1 billion rupees per day. These are impressive numbers, but we need to make serious efforts for its further adoption. Progress must be celebrated, but we need to be mindful of the gaps that still need to be bridged. I will highlight one particular one. As K-FIS results reveal, there is a persistent and troubling gender divide. Today, 56% of adult men in Pakistan have a registered financial account, compared to just 14% of women. And while 82% of men now own a mobile phone, only 46% of women do. These gaps are not just about technology access, they reflect deeper barriers of mobility, digital literacy, and cultural practices. Our performance on gender indices have not been great for a while. However, most recent ranking, i.e. 148th out of 148 economies ranked by the World Gender Gap Report of the World Economic Forum, is an absolute blow and deserves a wake-up call. Economic Participation and Opportunity Sub-Index is one of the sub-indices of this ranking, and within that, access to finance is one of the constituent indicators. We make progress on closing gender gap in access to finance. We contribute to a bigger cause of closing overall gender gap in Pakistan. I'm glad to share that Karandaaz is implementing a wide range of activities, a suite of activities in digital financial services space. We're investing risk capital in women-led businesses and are one of the anchor shareholders of Pakistan Microfinance Investment Company, the wholesale financier of microfinance sector with large number of women clients. But clearly, we need to do more, create momentum and partnerships that can deliver meaningful results. Karandaaz envisions a Pakistan where these divides no longer exist and where every individual, regardless of gender, has the tools to participate fully in the formal economy. We believe that inclusion is not just one-time achievement, but a continuous journey, and that data like the one we share today must guide us. Before I close, some acknowledgements are due. I would like to commend Ali Akbar, Karandaaz Knowledge Management Lead, his team, and our dear consultant Imran Khan for completing this important piece of work, and the panelists who will highlight the different perspectives of this data for their valuable time at today's launch. I would like to thank our sponsors, Gates Foundation, whose generous assistance is enabling us to implement such transformative initiatives. Thank you again for being here with us today. I look forward to discussions ahead. Thank you.
Thank you, Mr. Waqas. Thank you for those insights. Now, I would like to welcome Syed Samar Hasnan. Syed Samar Hasnan is the Executive Director and Group Head of Financial Inclusion and Islamic Finance at the State Bank of Pakistan. He leads efforts to expand financial access across agriculture, SMEs, microfinance, housing, and green banking, while also overseeing the transition to Islamic banking. A long-time champion of financial inclusion, Mr. Hasnan has played a key role in setting new records for agricultural credit and advancing gender-inclusive finance in Pakistan. He has also represented the State Bank on numerous international platforms. Mr. Samar, I would now like you to address the webinar.
Thank you very much, Mr. Hassan, for this very rich introduction. My dear Waqas, Steve, advisor to Karandaaz, ladies and gentlemen, Assalamu alaikum and good afternoon. I would like to congratulate Karandaaz for organizing this very important webinar, the subject of which is very close to the heart of the central bank. Karandaaz has been State Bank's key partner in enhancing financial inclusion for over a decade. Ladies and gentlemen, in the next 10 to 15 minutes, what I'll be covering is that I'll be moving to 5 areas. First, I'll be covering about 2 A2F, access to finance surveys that were conducted pre-NFIS regime. Then I'll move to 3 editions of NFIS with some numbers and especially areas where we could have done better, but as a matter of fact, we did not. Thirdly, what will be our focus in implementing NFIS 2028? And fourthly, and interestingly, some of the interlinkages between our supply side data and Karandaaz demand side survey results, because that's an interesting subject of next panel discussion as well. And finally, what is my message for the next panelist? So ladies and gentlemen, improving financial inclusion and literacy is a key policy agenda for central banks and regulators around the world. Toward this end, determining financial inclusion and literacy levels among masses has always been a challenge. Usually, data sets are collected regularly on the supply side from the perspective of the financial institution. However, data collection efforts from the demand side that is from the perspective of household individual, is limited and less frequent. Nonetheless, individual level surveys are necessary to get invaluable insights regarding financial behaviors, evolving needs and challenges of individuals, particularly those from marginalized communities. This is something that is missing in the supply side data. These grassroots level insights serve as a compass for guiding policymakers and financial institutions in designing their products and developing a complete picture of financial inclusion in a particular country. Hence, the importance of demand-side surveys, such as the one that we are discussing today, cannot be overstated. And let me again, appreciate Karandaaz for the work that it has done. SBP recognizes the need for comprehensive data to inform policy decisions. And in this connection, the audience would recall that 2 access to finance surveys were conducted in the past in 2008 and 2015. These surveys to the State Bank of Pakistan served as the baseline in 2008 and 2015. The demand side survey revealed that the level of financial inclusion, broadly defined as the share of adult population having a bank account, increased marginally from 11% to 16% between 2008 to 2015. Moreover, the 2015 surveys also provided a glimpse of the level of the financial literacy, revealing that only 39% of the population could understand the basic financial concepts. Ladies and gentlemen, these surveys provide as our baseline for developing an enabling environment for financial inclusion. Most importantly, it laid down the groundwork for development of the country's first ever National Financial Inclusion Strategy, NFIS 2015, followed by the launch of National Financial Literacy Program in 2017. Ladies and gentlemen, post 2015, because of the NADRA's unique ID numbers, the level of financial inclusion was measured solely based on supply-side data. And by 2018, 50% of, and I'm now quoting the number based on supply-side data, by 2018, 50% of the adult population was reported to have access to bank accounts. Subsequently, the second edition of NFIS was launched in 2018, which helped boosted financial inclusion levels from previous 50% to 64% in 2023. Undoubtedly, the implementation of the 2 NFIS leveraged new technology, supportive regulatory framework, and enhanced public-private partnership to promote financial inclusion in the country. Key highlights of NFIS 2023 results are overall bank accounts, and an area where Vikas is also referred to. Overall bank accounts ownership among adult women increased from 13 million in 2018 to 31 million in 2021. Gender gap in financial access reduced from 47% to 34% due to the banking on equality policy of the State Bank of Pakistan and its implementation by the financial sector. Digital financial inclusion was boosted through schemes such as Asan Digital Account, Asan Mobile Account, and RAS. The one that was again quoted by Vikas Sab, provided ease to access and usage of digital financial services. So in terms of some of the numbers, today we have got, more than 64.3 million branchless banking mobile app users, 21 million mobile banking users, 13.3 million internet banking users, and 34.7 million e-wallet holders, while the digital payments have seized a share of 88% in banking system transactions. Karandaaz survey findings, which will be presented after this speech, also report that the readiness to adopt DFS, Digital Financial Service, is improving. The report shows that awareness of mobile money has risen to 79% and SIM ownership increased to 63%. Ladies and gentlemen, after the successful implementation of 2 NFIS, State Bank has now launched its 3rd NFIS for 2024-2028. The latest NFIS aims to leverage progress made under the past 2 strategies, tackling persistent bottlenecks in financial inclusion and capitalize on our further digitalization efforts. The key pillars of this strategy are the following. Number 1, promote financial inclusion and awareness in the underserved and unserved areas, as well as vulnerable sectors and segments of society like women, youth, and disabled persons. I will underline this one. Underserved and unserved areas. The second, the focus of this strategy is enhance availability and usage of secure and easy digital financial services. Third one is, and this is an area when we compare, you see, the results of our target versus what have been achieved, is an area where in terms of the National Financial Inclusion Strategy, though we have achieved, you see, till 2023 strategy, we have achieved the headline targets, numbers. But if you look at the target numbers of the priority sector financing, those were missing. So there's a much more focus on priority sector financing. And when I say priority sector financing, I mean in the areas of SME, housing, agriculture, microfinance, and sustainable finance. The fourth pillar of the Financial Inclusion Strategy 28 is strengthen capability of both financial institutions and consumers. And finally, enhance consumer protection and awareness, which means the financial literacy. I must mention that while we have made commendable progress in adoption of financial services, concerted efforts are required to overcome cultural preferences for cash and to build trust in digital platform. This is why NFIS 2028 prioritized to enhance availability and usage of secure and easy digital financial services, improve ecosystem. Based on these priorities and actions, the headline targets for NFIS 2024-28 have been set to improve the level of financial inclusion in Pakistan to 75%, from the existing 64% of the total adult population to 75%, and to reduce the gender gap from, from existing 34% to 25% by 2028. Ladies and gentlemen, moving to the next theme, when I was comparing the two datas, there could always be an argument that the data should not be compared, the demand side data and the supply side data should not be compared. But when we compare this data, because these two numbers go to the audience, the supply side numbers and Karandaaz numbers differ from each other, and they legitimately differ. I was just thinking as to what are the reasons of, the difference between the two numbers. So the 3 or 4 areas that come to my mind, and I'm sure that the next panel that will be discussing in more details about those numbers will be pondering about this aspect as well. These areas are, number one, the age. Karandaaz, financial survey, financial inclusion survey, takes the age of adult population from 15 years and above. Whereas the State Bank of Pakistan's supply side data, which we get the numbers from the banks directly on the basis of unique identification, the age is 18 years plus. Hence, in case of Karandaaz survey, if the denominator, which is the 15 years plus above, is a bigger, of course, the number would come, the number of the financial inclusion would come smaller on that. The second one, of course, is the sample size. And I'm sure that I leave it to the expert that whether the sample size of 6,722, which is the case of Karandaaz demand side survey, is the right, representative of 143 million population of adult population of Pakistan are not, So I leave it to the expert, but that is again one of the reasons for the differentiating factor between the two results of the survey results of demand side and supply side. And the third one is, of course, awareness of those who have been surveyed, awareness about the awareness and understanding of the financial terms, and lack of trust in survey. So that also plays an important role. There's another factor which is the definition of an active account. In case of the State Bank of Pakistan's definition, that's very broad. Of course, when I look at the numbers of the demand side survey, which has been carried out by Karandaaz, that is, a narrow compared to the one that we use, and I agree that probably we should be using narrow definitions. So these are some of the factors which I'm sure that the next panel will discuss more in detail. Ladies and gentlemen, to get a true reflection of the level of financial inclusion and financial literacy in Pakistan, in our strategic plan, we have also planned, a couple of demand side surveys. Now, Karandaaz is also undertaking the survey. So again, I leave it to the next panelist that how can we synergize, our efforts that we don't do it in duplicate. How can we build upon each other efforts? Our intended, you see, sample size is something like 15,000, but I think that the next session may throw more lights on that and could provide insights. Ladies and gentlemen, we will also be exploring barriers and drivers for priority sector financing, including micro, small, and medium enterprises, housing finance, climate, sustainable, and Islamic. Lastly, the surveys aim to get insight of improving our consumer protection policy, so financial health and well-being of masses can be improved. Now, this is an area where no supply-side survey can take care of. It's the only demand-side survey which can take care of this particular aspect. And I'm sure that this would be more discussed in the next panel. I must mention that while opening a bank account is a crucial step towards accessing for formal financial services, but it does not fully encompass the overall state of financial inclusion. Following practices, some of the central banks globally, such as the Bank of Zambia and the Central Bank of Philippines, State Bank of Pakistan has also taken an initiative to conduct its own financial inclusion index. And Steve is sitting here and he knows that, and Vikas knows that that there has been discussion between the State Bank and the World Bank on the Findex number and our own supply side number. And because of the lot of, you see, gap in these two numbers, the difference between these two numbers, the State Bank of Pakistan has decided to take an initiative to construct its own financial inclusion index. Some of the central banks have already done that. And our key purpose is to have a comprehensive assessment of key financial inclusion parameters. So it should not only be restricted to have a basic account. It should go much beyond that. So access, usage, and quality, both from the liability side and asset side of the financial sector, will be covered in that financial inclusion index. Ladies and gentlemen, going forward, Karandaaz Financial Inclusion Survey insights will remain crucial to substantiate our efforts for improving financial inclusion by capturing real behavior insights related to underserved segment, particularly for women and youth, which can reveal significantly relevant data patterns for our policy interventions. Ladies and gentlemen, as I conclude here, I reaffirm State Bank of Pakistan complete commitment to build synergies with the private sector and to boost financial inclusion. With this, I would like to thank Karandaaz again for having me here and look forward to have more discussions in the coming panels. Thank you very much.
Thank you so much, Samar Saab, for this wonderful insights into this. Now, I would like to welcome Mr. Imran Khan, who will be sharing a presentation on the study findings, followed by a brief Q&A. Imran has over a decade of experience in financial inclusion research, with a strong focus on designing and managing nationally representative demand-side surveys. He has led the design and analysis of 12 nationally representative surveys across Pakistan. From 2013 to 2020, he served as research manager for Pakistan's Financial Inclusion Insights Survey, overseeing questionnaire development, enumerator training, field monitoring, data analysis, and results dissemination. Since 2022, he has led the design and analysis of Karandaaz Financial Inclusion Survey. His survey expertise is rooted in rigorous instrument design, contextual testing, my apologies, and a deep understanding of the digital financial ecosystem. Over to you, Imran. But before you start, if anybody has any questions during the presentation, please ask them in the Q&A section below, and I'll try and get Imran to answer them at the end of the presentation. Thank you so much. Over to you, Imran.
Thank you, Hassan, and thank you, everyone. This survey marks a decade of measuring financial inclusion in Pakistan, and we are very excited to share the results. Just to give an overview of what the survey aimed to do in terms of tracking access and demand, and also measuring adoption of financial inclusion in Pakistan. But one main feature of this current survey, which we'll go into more detail, was our focus on financial resilience. As in terms of when it comes to consumption smoothing, when it comes to balancing income with the expenditure, how are Pakistanis doing that? And that was the main focus of this year. First, we look at the overall numbers, the overall level of financial inclusion. And during the last decade from 2014 to 2024, we see a remarkable increase from 8% to 35% for Pakistan, but then also for the 4 provinces as well. All provinces have seen remarkable increase, and we'll see some details as to where this increase is coming from. But as we discussed earlier, as with everything with Pakistani data sets, gender gaps are something that are persistent everywhere. So from 2014 to 2024, we see a substantial increase in female financial inclusion from 3% to 14%. But at the same time, the male financial inclusion has also increased at a remarkable speed from 11% to 56%. As Samar Saab said already, in terms of the preparedness of adopting digital financial services, mobile, those indicators are improving. And what very important indicator in that regard is the mobile phone ownership. And what we see overall is that there has been a substantial increase in mobile phone ownership from 54% to 64% at the overall level. But within gender, and especially female mobile phone ownership, that has increased. And the gender gap between mobile phone ownership between men and women, that has reduced substantially over this decade. More female are are mobile phone owners. So speaking of, there was this mention of markets that could be targeted. So one thing to notice here that the female mobile ownership is much higher than the female mobile financial account registration. So you have a lot of financially excluded females who have mobile phones, and that's one category that one's targeted or is already being targeted, but that's one category where the improvement in financial inclusion can be very high. So another aspect of having a financial account is the proximity to a financial access point, be it bank branch, ATM, mobile money agent. If you don't have these financial access points close to you, the likelihood of getting a financial account, rationally speaking, is low, because I mean, you need, whether cash in, cash out, or other things, you need these financial access points. And what we see over the last decades, and I want focus on the dark blue bit of the bar charts here, the ones in white. They show the presence of a financial access point at less than 15 minutes from someone's home. And we see that it rose in 2015 from 46% to 64% in 2024. And where this increase is coming from, the bulk of this increase is coming from mobile money agents. In 2015, only 40% of people responded that they have a mobile money agent 15 minutes from home. But by now, more recently, it has gone up to 62%. So mobile money account registration or wallet increases, as well as financial access points. In both situations, mobile money has a substantial contribution toward financial inclusion in Pakistan. As we discussed already, I mean, as we mentioned already, RAST has become a prominent feature of the Karandaaz Financial Inclusion Survey. In 2022, like, we measured different aspects on the demand side of RAST, whether there's awareness, usage, and all. So what we see in terms of awareness, and this is awareness just of the RAST, the brand. RAST brand awareness has risen substantially from 10.5% in overall terms to 15%. In 2024. So, and the other aspect of this increase that we are seeing is that the RAST awareness is much higher amongst the younger population segment. So the younger population segments are more aware about RAST than the older population segment. Similarly, the financially included have a higher awareness about RAST than the financially excluded. So this was awareness about the brand RAST. But what does that awareness translate into knowing about the functions of RAST? And this is what we go into. So what percent of those who were aware about RAST, when we divide them by RAST users and non-users, we see that RAST users have a much higher level of understanding about RAST's different function. It's a payment system run by the government, it's interoperable, faster payments. This understanding or functionality of RAST is much higher than the RAST non-users. So we can see that RAST non-users don't know the value of RAST as such in that respect. That understanding is low. And even within the functions of RAST, RAST users, they know that it's a payment system, they know there's a faster payment, but the awareness that it's a cheaper payment system, that is much lower when you compare it with other aspects of RAST or other qualities of RAST. So one thing, there were these digital prompts for RAST usage or RAST awareness on mobile or financial apps in the past. So we asked survey respondents about how frequently they received those prompts. And then we also asked them about how frequently they used RAST. So what we found was that those who said that they received a higher frequency of RAST prompts, or who were exposed to a higher frequency of, they also tend to be those who use it more frequently. Now, there could be other reasons explaining this correlation as well, but there is something there in terms of the awareness raising efforts to prompting and the usage of RAST. So as I said earlier, our focus this year round was on the financial smoothing. So income expenditure mismatch and how people deal with that mismatch and how people use that. So the first question, one of the first questions that we asked was how frequently you find yourself in a situation where your income exceeds your expenditure. And the graph here shows that divided by the financially included and excluded. And what we found was that the financially included were less likely. About 15% of them said very often or often to a situation where they were caught in such a situation. Whereas for the financially excluded, this was much higher. Around 28% said that they were very often or often caught in this situation where their income was lower than expenses. And this is not just about owning an account. This also speaks about the subgroups, the groups within financially included and excluded. The excluded also tend to have more vulnerability to these shocks when compared with the financially included, and most likely with their incomes and asset levels. So once you're in that situation where your income is lower than your expenses, what do you do? So one of the things is loans. We all look for loans. So what was the source of loans? So this is the percentage of Pakistanis we found who borrowed in such a situation. Who did they borrow from? 85% said that they borrowed from friends and family. So that network, and this is a very big proportion when you compare it with the formal sources of borrowing, which are banks and other, which are at 13%. So what does that mean? That means that when it comes to borrowing, your friends and family or your network is something that you rely on the most. Also, the ease of getting loans. So it wasn't easy for most. Those who borrowed, 44% found it difficult or very difficult to get those loans from friends and family, which also speaks about when you're in a situation, especially if there's an external, whether it's floods or anything, and you're borrowing because of that external shock, your whole network also comes under pressure and might explain the difficult to very difficult part in this interchange. So then wanting a loan and then getting a loan are two different things. So those who didn't get the loan, how did they cope with these? And these bars, they don't add up to 100 because these were multiple choices were allowed. So because we wanted to understand different. So what do you do during such a situation where you can't find a loan? How do you cope with it? So a majority said that whether it's they're financially included or excluded, they said that we reduce our household expenditure or personal expenditure. And this is different types of the personal expenditure, but putting a cap on personal expenditure was one of the main one. But the other second was the use of personal or family savings. And in that, we see a distinction between the financially included and excluded. The included were financially included, was much higher proportion of them said that we use personal or family savings compared to the financially included. So that's also something to explore in future surveys in terms of the saving behavior, that whether the financial inclusion actually then how do we translate into savings. Then as we saw in the previous slide, 12% of those who borrowed, 12% borrowed from formal sources. So we asked them, what were the reasons for not borrowing? And those who didn't borrow, and when you see the difference between the financially included and excluded in that, the reasons are pretty much the same. So both the financially included and the excluded were of the opinion that we didn't borrow because paperwork is complicated, interest rate is too high, I can borrow through other means. So what does that mean? That means that loans as a use case, they are pretty much this valued similarly in the sense that the obstacles are similar for financial inclusion and financial excluded and included. So speaks volume about the rules or sort of the situation in the background that is facilitating this access, that the financially included don't seem to have much of an appetite because of their financially included status to borrow formally. And also that's something to explore more in detail. Then once you borrow, what is the loan limit? So what is the limit of loans that you can borrow? Now, one very stark sort of result from this slide is that a substantial proportion said that I do not believe I could secure a loan, or they didn't know whether they could secure a loan. So what that means is that when faced with such a situation, when you're looking for loans, when you're in need of a loan, the majority of Pakistanis didn't know how much they could borrow, or the loan limit, or how much they could raise. For those who responded with a number, the substantial or the biggest chunk was less than PKR 50,000. Now that's close to the monthly minimum wage. And that's how much they were sure that they could borrow from different sources, whether formal or whether informal. When we look at the limits, the loan limits such as 1 million and beyond, that's where a very small proportion of Pakistanis, a very significant small proportion of Pakistanis could actually create those loans or get those loans in those segments. Then another one was we also explored how the returning loan experiences for different types of, so you're borrowing formally from banks and others, you're borrowing for friends and family, and then you're borrowing from informal money lenders. How easy or difficult it is for you to return. So one thing that stands out in this graph is the difficulty in terms of informal money lenders. So when you're returning these loans from informal money lenders, almost 91% of the respondents were of the opinion that yes, it is difficult or very difficult for us to return this loan. And this percentage is then, it speaks volume about what sort of difficulties, and we have a lot of anecdotal evidence in terms of informal money lending and the practices that come with it. So what kind of difficulties, I mean, there are a lot of difficulties that could be explored further, but I mean, it sort of validates our perception about informal money lending and issues that it causes in terms of loans. So another thing was we looked into decision making. So household, personal choices, and we looked at it by gender. So when it comes to decisions, how do men and women feel about the different decisions? So whether it's daily household needs, decision about assets, about financial services for the household, and also financial services for oneself. And what we see is a stark differences between the between males and females in terms of the ability to decide. The only area where we see women responding that they have a higher level of decision making, where they say that, oh, yes, we can make a decision, is our decision about household needs like food, clothing, cleaning, supply. That's where you see women having a higher proportion. All about in the rest of the decision, whether it's saving livestock and land, financial services for the household or themselves, they have a smaller proportion. And this one, in terms of financial services for yourself, That is the very interesting one. So basically, you ask them whether if you want to have a financial service or an account for yourself, whether you decide for yourself or someone else. So only 11% of women said that, which is lower than the financial inclusion level of women, which means that I mean, even there, there is an issue in terms of getting an account. Even the financially included women would find it difficult to sort of get an account on their own. They have to have permission, and we go into more details about how these varies, or who are these women who can decide for themselves what demographic do they represent. And what we see is these different demographics that are represented here. And I would focus first on the financially excluded versus the included. And what you see is that even within the financially included, only around 29-30% said that they have the decision to choose the account themselves. What that means is that within that, even the financially included women that we have, they couldn't decide on their own. They had to seek permission, or they had to do something else to get that financial account. Only 29% could responded that yes, we could choose it on our own. But the more interesting bit is the financially excluded one, and this is a bigger proportion of the female population. 8% of them said that yes, we could choose our financial account, yet they remain to be financially excluded. So we talked about markets, we talked about potentials where the strategies could be targeted. This proportion, 8% of financially excluded women saying that we can choose to have a financial account, yet we choose to be financially excluded, is something that sort of indicates at what is on offer, what products are on offer, and how are they appealing to that audience of women who can actually, they have the agency or to make this decision themselves, yet they choose to be financially excluded. Another, in terms of autonomy, were the higher age, with age, as age increases, the autonomy increases. So the segment of 55 plus years of women, they had a higher autonomy when compared with younger segments. Then also in terms of the profession mattered a lot. So white collar workers in more jobs, they had a more of an independence in choosing these account compared to other professions. Then marital status mattered a lot as well. What we see is those who are married or single, they showed a much lesser level of autonomy in terms of the decision making. But when you look at the divorce separated bracket and the widowed bracket, the financial autonomy of choosing financial services for themselves seems to be higher. So finally, we looked at the trust level, and trust level is important when we're making this decision, when you're getting a financial account. What level of trust do you have in financial institution? And this is like a array of financial institution that we ask them for. And the financially included tend to have higher level of trust in financial services. And it's visible on each type of the financially excluded have a lower level of trust, whether state-owned banks or private banks and all of that. Another aspect of this bit is that the formal sources tend to have a higher level of trust. When you compare all these formal institutions with, let's say, Hawala Hundi, the difference is stark. And also like stock market brokers and all, because of, I think, knowledge and all, the trust level is low. So with this, we're ready for any questions or any comments that you might have. Thank you.
Thank you so much, Imran. The first question that we have is, could you please share details about the research methodology, including the sample size and whether it is nationally representative or not?
So the sample size is nationally representative, and at the provincial level as well as at the provincial level and the gender level. So this is something that we've been like doing since the onset. I mean, the sample of it could be debated that how much of a representation issue is there and how much of a issue could be there, but this is I mean, in terms of representation, this is what we're doing.
Thank you so much, Imran. Anybody from the attendees, if you have a question, please ask away in the Q&A section, And I believe Samar Saab has a question. He has raised his hand. Please, Samar Saab, ask away.
Thank you very much. I just have a comment and no question. Rather, I would like to commend, Karandaaz for carrying out such in-depth, analysis. And my comment was that the sort of analysis that you have made and the results which have come out of the survey, especially on gender segmentation, are marvelous. And these are very timely as well, because the State Bank of Pakistan is in process of developing a next generation banking on equality policy, because the last one has, just finished and completed. So I think that would be a great input and feedback for developing that study. So I just want to commend that. Thank you.
Thank you so much, Samar Saab. The next question we have is from Nadia. That's for you, Imran. In terms of numbers, what's the sample size, please? I know you mentioned that in the presentation, but can you answer that again?
So it was 6,672 adults, and we used the sampling frame of the 2017 census, and we targeted population 15 plus. This has been a standard definition for FINDEX as well as for Financial Inclusion Insight Survey that we're carrying with this. And there was a random selection of EAs, and the details are in the report, but this is a randomized sample.
Okay. The next question we have is by Ms. Varda, which is, do we have the data of smartphone coverage across Pakistan?
Yes, that's actually in the report. I can pull it up if you give me a minute. But if you look at the report, we have looked at different aspects, and the mobile money, the mobile phone in terms of the smartphones, and we also make a distinction between basic phone, feature phone, smartphone. So smartphone ownership has skyrocketed during this period from 2014 to 2024, and it has a lot of bearing on the apps and in their usage, and the importance of human-centered design, as Samar Saab already said, especially in terms of gender. So more research is needed in terms of there was a lot of good work with the ROSCAs making their way to apps. And ROSCAs, as we know, and from research, is that one of the most common or most popular method of saving among women is ROSCA committee. So committees come into, we actually, in a previous survey, we had this focus group discussions, and one of the participants said that she used to do ROSCA with her mom and her aunts while she was in one of the cities in Pakistan, and then she got married and moved to another city. So when she moved to another city, she didn't want to do ROSCAs with her in-laws. So then she did ROSCA with mobile money wallet back with her mom and her aunts in her, So yeah, so
Okay.
Yeah.
Thank you, man. So we have a follow-up question by Ms. Rumesa. I'll ask two questions at the same time. The first is, what is the percentage of rural urban in the sampling? That's the first question. And the second is, for the purposes of this survey, how did you define blue collar versus white collar?
Yes. So I'll give you the exact percentage. We'll have to go to the, I think it's 32. I'll have to confirm it with you in terms of the sampling and its division. But how defining rural and urban, and we explained it in the report as well. We asked about professions. So this is a long list of professions that's also part of in the survey. So we asked about, okay, once you do a job, what kind of jobs do you do? So then we classify on our own that these are blue collar jobs and these are white collar jobs, and then it is one of the annexes. It's explained in the report.
Thank you so much, Imran. I think we have time for one more question. After that, I'll have to go to the panel. But in the meantime, I'll ask that you stay behind. The question is, why is there no centralized data of State Bank regarding mobile coverage and financial inclusion that can be used as a standard by startups across Pakistan?
That's more of a question for the State Bank, but I think mobile phone falls under the purview of PTA. But if Samar Saab or anyone else from State Bank wants to follow.
Okay. Thank you so much, Imran. I think that's it from our end. I would like to see that you stay on and you can answer the
Yes,
question in the chat
I
box.
will respond about the sample size in the chat. Yeah.
Yeah,
But
yeah, thank you so much. Now I would like to ask the panelists for panel one to please turn on their cameras so that I can give them an introduction and then Steve can take it off from there. So now I would like to welcome Mr. Steve Rasmussen, who is former CEO CGAP, to moderate the first panel discussion on from growth to gaps, who's included, who's left behind, the next horizon in financial inclusion. Steve has over 45 years of development and financial sector experience. He worked with the World Bank Group for 20 years, focusing on financial sector development, primarily digital financial services and microfinance, including 15 years with SIGA. During this time, he founded Karandaaz Pakistan. He worked with Aga Khan Development Network for 20 years, including 8 years as the CEO of AKRSP in Gilgit-Baltistan. During this time, he was the founding CEO of the Pakistan Microfinance Network. Our panelists for today include Mr. Janzeb Khan. Janzeb is the president and CEO of Easypaisa Digital Bank, where he recently launched Pakistan's first digital retail bank. With over 25 years of global banking experience, including 2 decades at JP Morgan Chase, he has led major initiatives in digital banking, payments, fintech, and M&A across North America and Asia. Next up, we have Umair Ahmed. Umair Ahmed is Senior Joint Director at the State Bank of Pakistan with over 18 years of experience in advancing financial inclusion. He leads key initiatives including the National Financial Inclusion Strategy, Banking on Equality Policy, Asan Mobile Account Scheme, and financial literacy programs. Before joining SPP, Meher spent 7 years in commercial banking. Lastly, Meher. Meher Shah is the head of segment and research at Raqami Islamic Digital Bank with over 20 years of experience in research, advocacy, marketing, and financial inclusion. She previously held senior roles at Karandaaz Pakistan, where she was my boss, the South Asia Micro Entrepreneurs Network, and the Pakistan Microfinance Network. At Karandaaz, she led the development of Pakistan's digital bank regulatory framework in collaboration with PricewaterhouseCoopers and the State Bank of Pakistan. Meher has also led national surveys on financial inclusion and consulted with the World Bank in Kabul. Over to you, Steve.
Thank you very much, Hassan. That was a useful introduction. Just to say that we will do some specific things on this panel, but I must say I at least have to start with a very brief comment on just how I echo Summer on this one, just how rich and how good this data is. I think the real issue is not to sit here and say, well, where are we exactly today, but to understand trends and to look to the future. And I think that's partly what we're trying to do on this panel. I mean, progress has been there. That's what everyone has said, and the data shows it. The gaps are still there. But the details really come into how we use this to improve where we're going and what we're doing down the road. By the way, I very much appreciate what Samar Hasnain mentioned about the State Bank developing its own financial inclusion index. That will be a very interesting task to take on. And I agree, in countries that have done that, it really does use rich data. We're not going to get into all the gaps and all the issues and all the whatever that came up in here. We can only do so much in this panel. However, if any of the panelists want to comment on things that aren't in the specific questions that I might ask, please feel free to do so. I was very struck, for example, by the fact that in Imran's data, the trust factor, I mean, 63% of people who are financially excluded from the formal system still trust state-owned banks. I mean, I just find that absolutely fascinating. And if 90% of those, it's just so interesting to me that we've got some bigger issue going on here over why we're at the level we're at. All right, just before we get to the questions, I mean, 2 of our 3 panelists come from digital banks. Fortunately, they have a much richer background than just digital banks, but we're clearly focusing on the future here with 2/3 of our panel. But let me start from the State Bank, from Umair. Thank you for joining us, being willing to do this. The survey, this survey highlights how financially included respondents score much higher on the literacy indicators. And Samar Hasnain also mentioned the state bank's push, a strong push on literacy. How does the state bank plan to address this issue of low financial literacy, and will scaling digital solutions such as Rust? I mean, there was a lack of knowledge about Rust in specific in the data Imran came up with, but also sort of across the board, it seems that there's a literacy gap, there's a knowledge gap, there's an understanding gap. It's not just a usage gap. But what would you comment on that issue related to where we go from here, and what's the state bank planning to do?
Okay, Steve, thank you very much. And first of all, I would like to congratulate Karandaaz for conducting this K-FIS survey. And I think it's a very timely survey because State Bank of Pakistan has launched its third iteration of National Financial Inclusion Strategy, where we are more focusing to provide financial services and improve the level of the level of socioeconomic conditions of the people of Pakistan. So for this, the financial inclusion being a major play a major role in terms of providing the accessibility and usability of financial services among these people of Pakistan. So, as you mentioned, rightly mentioned that there is a strong connection between the financial literacy and financial inclusion, and more people, when they are more literate financially, they can have more financial accounts, and they are more financially included, and they can use more financial services. So there is a strong link between the financial inclusion and financial literacy. And as you already mentioned, that this survey also validates this, that the more included people have more financial literacy, and then they have more usage of financial services. So there is a strong linkages between the financial inclusion and financial literacy. And you rightly mentioned that the people who are actually out of the financial net, they have the less financial literacy. And what State Bank is doing, State Bank is planning to come up with an approach where we have targeting more people in terms of providing the digital financial services, the knowledge of digital financial services, and we are targeting to have providing financial literacy through digital means. So digitization, I think, it make a more important role in terms of providing financial literacy, their financial acumen to improve the level of financial acumen among the underserved segments. So in that way, State Bank of Pakistan is trying to improve the level of financial literacy among the unbanked population. So I'm just giving a very specific example of that. Under the National Financial Inclusion Strategy, we have launched the National Financial Education Roadmap. Under this roadmap, we are trying to improve the level of financial literacy among the underbanked segments, and we have come up with a segmented approach where we have different segments, and we trying to come up with a tailored content for different segments. For example, if we are talking about the women, there are different shades in this segment. For example, they are women who are the home-based workers. They are women who are the from the salaried class. They are the women from the SME sector. So if we trying to provide these women the financial literacy, so their needs are different. So we are come up with a segmented approach where we will try to develop our tailored content for these segments, so to meet their needs. So in that case, we are come up with a segmented content. That is the one approach. Then we are trying to inculcate the financial literacy into the financial curriculum. In that way, we actually trying to embed the financial literacy in the national curriculum, so our young generation, they come up with the financial more financially literate at the earlier age. Similarly, we are also trying to create a financial literacy center within the State Bank of Pakistan. So we want to trying to come up with all the financial literacy initiatives that have been done by different stakeholders under one umbrella, so we can synergize our efforts and we can do more in terms of financial literacy in the country. Similarly, talking about your point that how RAS and the fintech solutions. So in that case, we actually want to have more focus in under National Financial Education Roadmap to bring more focus on financial education about the financial services through digital means, as well as for the digital financial services, because if we are not providing the right type of information, right type of knowledge, they cannot benefit from the emergence of the digital financial services and the rising trend of the digital financial services in Pakistan.
Umair, thank you very much. I think it's interesting that across all of the speakers today, and Umair has re-emphasized that, is that we're sort of looking forward. We're looking forward and saying, look, technology, things like RAS, digital banks, and so on, might be the way forward. Certainly the younger generation is going to go in that direction, but let's see how that goes. John Zabe, I want to come to you, and I am going to ask a question. Easypaisa, I mean, you've been the CEO of Telenor Microfinance Bank, and Easypaisa was a brand that you manage, and now you're moving that into a digital bank. So with that kind of license, how is Easypaisa different from not only a conventional bank, but I would go back in the last 20 years of history and say, all the initiatives the state bank has taken, microfinance banks, branchless banking, the EMIs, how is this different, and why should we think that this is going to benefit customers, and why do we think this will make a difference to financial inclusion?
Yeah. So first of all, thank you, Steve, and then friends at Karandaaz for inviting me to speak at this forum. And I think just like everyone else is echoing, we internally are also analyzing Karandaaz survey very closely alongside State Bank's data and fine-tuning our next 3-year strategy. So this is extremely helpful insights from Karandaaz as well. So going back to Steve, how is digital banking different? And if you look globally at names like Nubank, Revolut, Monzo, that didn't even appear in the banking landscape 5 years ago, are now being talked about globally, right? Same, I think, is going to happen in Pakistan. And the demographics are reflecting that. There's 64% of the Pakistani population is youth, right? And it's a youth bulge which we have, which is a good thing to have in Pakistan also. They are tech savvy. They are more prone to not using bricks and mortar and seeking digital means for it. So if I summarize how we're going to be different, is in 3 words, which I echo all across, is the expectation from State Bank and an expectation of our shareholders from us is we ought to be better, cheaper, faster, right? Because if you summarize what's the difference between us and any other conventional entity, which has bricks and mortar, while we are supposed to operate with bricks and mortar, we are supposed to be leaner, we are supposed to be faster, and then we are supposed to pass on those operational savings and the convenience to the customer also, right? Which will help ultimately financial inclusion also. Now, if I boil it further down, we disrupted, Easypaisa has become a household name in payments many years ago, right? In Pakistan, we disrupted the payment space because we fulfilled a need which wasn't being fulfilled for common masses around ability to send money safely, securely to their loved ones across Pakistan, right? Now with the digital banking license, we will be able to provide, as an example, international remittance services to the customers with under this license, which is critical to the national economy as well, and to many households who seek that help on a monthly basis from their loved ones overseas, right? In addition to that, we are trying to now we have an avenue to graduate our customers to higher limits of accounts, right? As they grow in their professional careers over time or their business employment, now we can offer digital savings, digital checking equivalent accounts with higher limits. So they have the ability to save, then the ability to invest in instruments like term deposits, which ideally you would need to go to a physical bricks and mortar branch and sign off on a stamp paper to invest in a term deposit. Now you can do with one click today on the Easypaisa digital app. How is it different? Now we have enabled that instrument of savings for masses as well. Now, over time, we will introduce wealth management, further instruments in wealth management, insurance, which is highly underpenetrated, right? We need to provide the ability of the customers to protect themselves in times of need. We will provide those services beyond the basic payment services, which we were unable to provide. And I think that will bring convenience to the masses, which we did and disrupted with payments, and now we will provide them with a full financial suite digitally over time.
Thank you. That was a good intro on digital banks. And we'll probably come back to that in this conversation. Mayor, I want to turn to you. John Zabe has given us an intro to digital banks. That's what you're part of now. If you want to go off this question and answer something else, you're welcome, because you've got a long background doing research in this area. But just to say, I think what John Zabe has said is that the digital bank has the possibility of addressing some of the deeper usage issues. And the survey shows that we haven't really gotten there yet. I mean, even if people are financially included, they tend to be included over one thing or a limited, more narrow usage pattern. So, what are the key barriers that prevent a deeper use? That is, more use cases, actually making this much more part of your life than just, one use every 3 months or 6 months for some reason. And do you agree with John Zabe on the question of digital banks being set up to really address that kind of issue?
Absolutely, Steve. I think I would definitely second what Jahan Zabe has said. And also adding to the point Umair mentioned, about deeper segmentation. So I think we have to take a segmented approach. And by segmented, I don't mean overall, the way we say that SMEs are not, don't have access to finance, or women are not banked enough, or, the youth. We need to go deeper than that. So like Umair pointed out, in the slide that Imran showed us on financial inclusion, they've done a very, very granulated view of women in the country. So we do need to go much, much deeper and study these different segments and look at, I think what the sector has done is we've really taken a product-wise approach. And that we really need to take is, what problems are we solving? So I'm for market and working women at the higher end of the market. So they, the white collar and the blue collar. So there are very, very different segments that we need to be dealing with. Going beyond payments and nano loans, which financial services, bill payments and P2P transfers, and sort of nano loans is the best that we've been able to do in most cases. So definitely the digital banks have been established with the understanding and with the hope that we will be able to get to the underserved. But a couple of very important bottlenecks, which I think we don't talk about enough. One is, access in rural areas. Some maps which showed 3G, 4G, 5G connectivity across different countries. What I saw for India was a purple fabric across the map of the country, north to south, east to west. 5G is Pakistan. It was a line which sometimes appeared and sometimes disappeared down the Indus. Now, that is not where the sum total of this country lives. More than 50% of our population is still rural. If we're not going to take infrastructure investment into rural areas, we are effectively locking out 55%, if not more, of the population. So I think that is a very important aspect to consider. We really need to lobby on this with, government, donors, that infrastructure investment is step number one. Because if your infrastructure investment is not there, you're not only locking out the rural population, but people like us have our hands tied, right? How can we take our offering into the rural areas if there are no rails for us to provide those services? So, rural connectivity, infrastructure investment is very important. Yes, Engro has recently bought out Jazz's towers, but, we still, it's a significant deal that happened, but we still need to see what the contours are going to be and what it's going to mean in the industry. So that is one aspect. I think digital banks, because our nature is such that we will not have a physical presence. We're going to be using digital rails, which means that we will be dependent on partners to scale and to enter the market. Now, Telenor is different to a number of the new coming up because they've been in the market, their brand is very well known. They have which are bringing in a complete new brand, and we don't have a physical presence. Then partnerships become very important as a way to scale. But how do we number one, make that process faster? In terms of technological integrations, how does that process work more seamlessly? And also, what is the amount of data sharing and data sharing that can happen, so that we can bring in systems which are not dependent on feet on the ground. So, those are aspects which, if I'm to sum up, I would say, infrastructure investment, we need rails in rural Pakistan to really get to the underserved. We need, and lastly, I would say, the State Bank has been very supportive and, very open in their discussions with us. But also, I think some regulatory aspects need to be looked at. So, for example, are we just recreating what the commercial banks or, we haven't gotten to that part yet, but how do we deal with risk now? And the compliance frameworks that are in place right now are really set up for commercial banks with brick and mortar structures and not necessarily digital in place. So how do we get those regulations to be more amenable to digital entities? So these are, some of the major barriers that I think we need to think through.
No,
I hope
thank
that
you.
answers your question.
Yeah, thank you very much. Very useful. I don't know if it was my connection or yours, but we missed part of what you said. I don't know if you can improve your connection before I come back to you next time, unless it's me that's having problems. But
I think it could be me. I've changed 3 spots.
okay.
Let me try again.
Okay, go ahead, and we'll go on to Umair and John Zaid before we come back to you. Umair mentioned 2 big issues, and I don't know if we'll get a chance on here to discuss them, but it is interesting that beyond the data we're digging into, there are infrastructure issues. I mean, I have advocated for 10 years that beyond getting electricity and roads, which tends to be the government's top priority, somewhere on there ought to be, you know, fiber optic connections across the whole country. And it's not just about financial services, it's about employment, it's about education, it's about healthcare. Anyway, I'm not going to, well, I just did get on that issue, but I'm not going to try and discuss it further here. I think the partnership issue is also important. I mean, we do have disaggregated financial systems happening, and partnerships become ever more important. Umair, coming back to a point that I think Summer made, you know, on the national financial inclusion strategies, and the current strategy has some really ambitious targets in it, and justifiably so. I think ambition is important, including things around digital payments, which we've been discussing, but I think digital financial inclusion at a much deeper level, even SMEs, which we're not discussing a lot today. But what specific measures is the state bank taking to ensure implementation across provinces? We saw the provincial differences in the data. Across rural areas and urban, again, we saw the differences. I might even add to that across gender, although Summer mentioned a number of things going on. But within the survey, these differences that are there, how does the National Financial Inclusion Strategy try to address those?
Okay, Steve, thank you very much. As in the National Financial Inclusion Strategy, we are targeting to reach the financial inclusion level to 75%. And similarly, we are aiming to reduce the gender gap to 25% from the existing level of 34%. So how we can improve these numbers? So for that purpose, it is important to understand the disparities within the different provinces and regions and district levels. So to understand, first of all, there is need to understand what is the issue, what is the gaps, and then how we can come up with these issues. So under the National Financial Inclusion Strategy, we are starting to come up with our district level profiling, where we want to understand what are the gaps at the district level. For example, what are the economic opportunities available there, and what is the banking infrastructure deployed there. So mapping all these analysis, we can come up with a holistic approach to how to we can improve the disparities among different geographies, different provinces. So that is the number one area that we want to understand. Then based on that understanding and that assessment, we want to improve the level of access points in these underbanked areas. For example, we want to improve the level of number of branches, number of ATMs, number of POS, number of agent networks within these under segment areas. So we have more opportunities for the rural population to have financial service to use to access and use the financial services. Then number three, we are focusing on improving the digital landscape, digital payment landscape within the country, where we want to improve the existing initiative like RAS. We have come up with new use cases under RAS to improve the usage of financial services. And similarly, we are coming up with innovative ideas, where we are trying to come up with innovation hubs. We are coming up to regulatory sandbox to come up with some new ideas to address the challenges of the financial exclusion within the unbanked segments. I will give you an example. Under the National Financial Inclusion Strategy, we have an action to facilitate digitally enabled villages, and we are trying to target 20 villages under this financial inclusion strategy, where we will not only provide the basic digital infrastructure in terms of internet, in terms of the mobile phone usability, and then on the basis of that, we will provide digital financial literacy to them, and we want to give them the opportunity to have the digital financial services in terms of account ownership, in terms of use of financial services and the financial infrastructure. So this concept is basically provide a basis for us to expand the digitally enabled ecosystem within the Pakistan. And this initiative is currently being piloted by the Central Bank of Egypt, and Pakistan would be the second country where we would have such initiative. Thirdly, when we are talking about the account ownership and use of financial services, the other aspect is very important for us, that is access to finance. Here in Pakistan, although we have get some achievements and some progress in terms of account ownership through digital means, but the access to finance is still a challenge for us. And if we want to provide financial services to the underbanked segment and provide the access to finance so they can improve their livelihood, they can get better opportunities for businesses, we want to provide them the access to finance through digital means. Under this State Bank of Pakistan, under this National Financial Inclusion Strategy, we want to have more digital platforms to SMEs, to agriculture sectors, to microfinance, so they can come up with a more digitally enabled financial services. So that means they can get more access to finance through digital platforms, through digital credit scoring models and some other digital initiatives that will allow them to access the formal financial services. Number 4 is the capacity building of the banking sector as well, because when we are talking about providing the digitization and digital financial services to the masses, there is a need to improve the capacity of the banking sector as well. So in that case, as Meher mentioned, that there is a need to look at the regulatory framework, because when we are talking about the digitization, the regulatory framework should be aligned with the requirement of the digitization, the agility, the leadership that provide the digital financial services. So our regulation should also align with these requirements. And last but not least, we are trying to also improve our data analytics, because data analytics is very important to provide financial services to the underbanked segment. So as Samar Sanan mentioned, we are trying to develop our index, the financial inclusion index, where we try to have a 360-degree analysis of financial services, where we are not talking about the accessibility, we are talking about the usability and quality of financial services that are available to the unbanked segments. And lastly, we are also working on a digital dashboard, financial inclusion digital dashboard, which will provide data analytics to the banking sector, so they can assess where there is a need to provide financial services. So these are some of the initiatives that we are taken under the National Financial Strategy, and we are hoping that by adopting all these initiatives, by implementing all these initiatives, we will definitely reach our target of 75% of the financial inclusion level. Thank you.
Thank you very much, Umair. That was a great summary of a very ambitious national financial inclusion strategy. I think the digital banks and everyone else on this should be very happy to see that kind of framework and support from the regulator. Just to say, and Hassan, you also need to listen to this, is that I'm going to ask only one more question each from Meher and Jahanzeb, and then I hope we'll get a few minutes to do questions from the audience. So, and if Jahanzeb and Meher, if you could keep your responses reasonably short. I'm going to modify, I know we discussed questions ahead of time, I'm going to make a slight modification for both of you. But Jahanzeb, first of all, the survey shows that 62% of people across Pakistan live within 15 minutes of a mobile money agent. And Umair also mentioned agents as important. And that piece of infrastructure has been important in our past. It is important in our present. It's important in other countries, both for opening accounts as well as for the the cash in, cash out transaction because we still transact mostly in cash. But I would like to, and so the question is that how does Easypaisa look at that proximity issue, but also go beyond it? And Umer talked about the, we're going into a different stage. We're trying to be much more digital in how we onboard and how we transact and what we do. So does this agent proximity issue, will it matter as much in the future? Where do we stand on this issue, and how do you view this in your work?
Thank you, Steve. First of all, I think the cash in, cash out problem exists, right? We need to be able to solve it somehow, especially. So the agents have played a critical role in solving it in rural spaces across the board. Now, what we are trying to do is we are trying to enable, yes, the volume and the tickets, the volume is huge, but the ticket size solving for that problem is very low, typically, right? We are trying to now at Easypaisa, trying to figure out how we can now graduate the ticket size and enable a higher ticket size somehow remotely, right? Outside of IBFT, outside of RAST, how does the cash go into the system first, and including a larger ticket size enabling. Now, where we can help the industry, the digital banks and the traditional banks, which I think has been an ask for a long time, is where we can open up our agents and agent base to the entire banking channel. We are working closely with the State Bank of Pakistan right now to make and create that open banking system where newer players like the 4 new digital banks, who will face the same problem, by the way, will be able to utilize the agents and all the foundation that we have built over a number of years to enable it across not only the new digital banks, but across all conventional banks. I think number one, that's going to be a game changer across the board. That's number one. Number two, I think what digital banks need to overcome, we need to overcome, is to gain the trust of the customer in digital services. That's the foundation, even though it sounds very similar, and you saw the metrics in the K-FIS where the state banks are most highly trusted and foreign banks were pretty low, which was contrary to my belief, by the way, right? But that's what the data is telling us. So, but regardless, we at Easypaisa know that we have to gain the trust of the customer in order to increase the ticket size and in order to increase the use cases that the customers could use beyond the mobile top-ups, beyond the transaction limits, to become a primary account from a transactional account, right? In order to do that, I think there are two things which the entire industry needs to focus on. We are going to focus on, I'm sure the others will need to, it's a question of time. One is customer experience, right? Yes, in a physical branch, a personal relationship manager can overcome and help with that relationship, right? In a digital entity, we ought to be looking at 4 nines of availability. We ought to be providing the best customer experience remotely, where it's self-enabled within the app or whatever digital means we can provide to the customer to overcome the relationship aspect of a human being. That's number one challenge all digital banks are going to face. And over time, the conventional banks are going to face, because the youth do not want to walk into a bank branch. They are going to avoid it at all costs. The number two most important in order to gain the trust is strengthen our risk and fraud management posture. It's highly important we enable our systems, and it has to be done systemically, right? And overcome the cybercrime, the fraud, and the scams in order to gain the trust of the customer. I think so. So one, yes, we are working on opening up our platform to everyone. That's number one. So it becomes a level playing field, because it's going to help everyone. If we do not self-cannibalize us, somebody else is going to cannibalize us. So I firmly believe in that. So we're going to do that. It's going to help everybody out. Secondly, in order to gain the customer experience, customer trust, we have to improve the customer experience and improve the risk and management systems, which we are going to focus on, right? And then thirdly, I'll just add, I think State Bank has been a phenomenal partner, I think, in this journey, very progressive. There are policy interventions which are required at the government level. And finally, I think I'll give you an example, Easypaisa, platform service upwards of 9 trillion PKR just last year. And it's growing phenomenally, right? It's not slowing down, it's growing phenomenally. But there's still a large pie sitting out there. P to G, G to P is still missing, right? In a large number of cases. So policy intervention at the policymaker levels, and we are working with the policymakers very closely on that. And you'll see inklings of that. So we have to make cash more expensive. There was a Karandaaz study, 95% of transactions at fuel stations are cash. We should make cash transactions more expensive, and you saw inklings of those being talked about in the legislation in the budget cycle recently. Then again, the cash on delivery is so high. Why can't it be done via digital means, via QR codes? Again, making cash more expensive is gonna lean the folks towards digital means. And then at the regulations level, we know in our culture there is a fundamental problem of SIM ownership amongst women, right? So we need to decouple at some point, and we are again working very closely with State Bank, and they're working on formulating the right response on figuring out and decoupling the SIM ownership to account ownership. Because otherwise, a lot of women in Pakistan are unable to open up an account because they don't own SIM, their husband or somebody else open. Now, it doesn't mean we should lower the authentication level. We should introduce alternative authentication levels for such customers whose SIMs are not in their names, but they would want to open up an account. And we are working closely with State Bank on that. I think a policy tweak to that will make a fundamental change in ownership of women accounts within for financial inclusion. So I'll take a pause. Thank you. I went a little bit longer.
No, thank you, John Dave. That was there was a lot in that response. Some very good stuff. Appreciate it. You must have had the ear of the finance minister on the issue of petrol pumps, but I was traveling in Chitral at the time, and I think the petrol pump owners were much more pessimistic about that than the finance minister.
Yeah, we did that at Easypaisa, that proposal to based on Karandaaz survey, by the way.
Okay. Wow. All right. So we're using the data. Mayor, last question for you, and I hope we still get a couple minutes for other things, but I'm going to change this a bit. I mean, Waqas in his opening talked about a wake-up call on the issue of women's participation, and we've seen the gap in usage of mobile telephones. We've SIM ownership, as John Zabe just mentioned, but I'd like to go further than that. And you talked about the gap anyway around just connectivity, the infrastructure issues, which affects both men and women, of course. But the differential is still pretty big with women on any way we look at this issue. And Imran's data shows it over and over again. Specifically on digital banks, I mean, how do you address that issue? How do you look at that issue? And there have been several comments in this webinar so far on that issue, but I'll give you a chance to comment on that for us. Thank you.
So this is always a tough one to crack. We often get asked the question, how are her financial needs different to a professional man's financial needs? So, and a lot of the time we come up with the answer that, sort of the needs are very similar, but then there are sub-segments within the women segment which have different requirements. So, for example, what about housewives? A number of them do need financial accounts. They do need instruments for saving. They do need instruments for investment. So, and specifically when we talk about fractionalized, so, investment in fractionalized gold, investment in fractionalized property, I think those could really be opportunities to bring more women into the financial sector. The other thing is, of course, sort of the low income women. So over there, I think a hub and spoke model is something that should really be explored. There are a whole lot of community organizations, non-profits that work with women specifically. These include the RSPs, which work across more than 80% of the districts in the country, again, rural-based. Then there are a lot of community organizations that work on upskilling women, because, with women, sometimes I feel as though we're putting the cart before the horse. If a woman is not economically active and integrated into the market, will she open a bank account? So those are the areas that we need to tease out. Are we putting the financial account before the economic activation of a woman? A lot of the time they're activated, but we're just not getting to the right hubs to be able to target those large numbers. So I think we really need to look at the type of entities that we need to partner with. Of course, income levels become consideration, because even with housewives, if they don't have their own income source and they're dependent on their income source, then lending is not the product to lead with. Then saving and investments may be products to lead with. So, once again, going back to the slide that Imran showed, I think what is really going to help us move the needle on women and kind of chip away at that very big segment, 72 million adult women in this country, is if we're going to take a granular view and, sort of get at it slowly, little by little.
Thank you very much. I think in both your responses to both questions that I asked, you raised the bigger contextual issues, one around the whole sort of infrastructure and how that works with access, but also on this one around where women sort of fit into the economy more broadly. We're not going to solve all of the world's problems just from a financial inclusion perspective, but thank you for that. Hassan, we've got a few minutes. Were there questions on the chat? Are there other things that people want to?
Yeah, hey Steve, we do have a few questions. I'll
Go
try
ahead.
and get them to you. So the first is that so it's one of them is addressed to a panel. First is,
Why don't you ask the
Umair
panel
Saab,
directly?
that livestock is around 15% of GDP, but 99% is non-regulated, unregistered, out of digital network and cash-based. How are you planning to bring them into the network? Umair Saab or Samar Saab, if you want to take this.
Samar, you have a raised hand?
Well, let Samar answer that question and ask his own after that.
Yeah, I wanted to make my own comments. Yeah, that's a separate one.
So regarding the efforts in terms of making financial services more in the financial net, and to reduce the reliance on cash, State Bank of Pakistan has already mentioned that in the financial inclusion strategy, we are more focusing on providing the digitization of the financial services. So I think this is the only mean through which we are actually providing more financial services, and we can reduce the currency in circulation in the country, and we can reduce the dependency on cash. As you have seen that there are certain measures that have been taken in the budget, where we have providing more taxes in terms of getting cash from the bank. So like that initiative, I think we are trying to reduce the dependency on cash, and we try to improve the digital financial services, the spread of digital financial services within the country. And the National Financial Inclusion Strategy is focusing, because the digitalization is, I think, is the future. in Pakistan. And if I may mention, during the last 1 year, the overall payments, out of the overall payments, 88% payments are now being done through the digital means. So digitization is actually is now is the future, and is now spreading around. So that's in that way, I think we can come up with this problem of more dependency on cash.
Thank you. Should we let Samar Saab ask a question, and then we'll come back on the panel? We don't have much time, Hassan, so you might want to take. I don't know if we can
Yeah,
answer all the questions.
we have Steve. We have one time for just one more question, but before that, let's have Samasab with his comments
Okay.
or his question.
Okay.
Thank you very much, Steve. And I was when the last comment was made, I was lost, you see, in a thought. And that's just a comment that I'm making, you see, in less than half a minute. That's not a specific question. What I was wondering is that are we seeing, are expected to see financial exclusion, another type of financial exclusion's birth out of the financial inclusion? What I'm referring to is that what is an incentive? Now, the relevant question is not that what is an incentive for an excluded person to have an account? The question is, what is an incentive for an included person to keep an account? I'm referring to the usage, especially, you see, because that's now being used only for the transactional activities where the saving has gone. So that's just a food for thought. Thank you.
Great point. Hassan, go ahead.
Yeah, I have just one more question. That's from Mr. Janzeb. That is that here we have 95% retail sector is cash-based. How is Easypaisa planning to reach out and facilitate? And what will be your suggestion to government for bring them under the tax net? If you have any suggestions.
I think it's less so about bringing them under the tax net. It's about widening the digital footprint. So I firmly believe first we need to widen the footprint and then worry about the tax net. Otherwise, we'll keep failing at it. But that's my personal view at it. I'm sure there are government policies. So what we are doing, right? And we need policymakers' help on it, right? We need to make cash more expensive in order to encourage more digital payments. What does that mean? If you go to most of the merchants, they will agree to having a P2P on Easypaisa. They'll say, "Aap Easypaisa kar dein. You can do Easypaisa to us." But they will avoid the P2M, which is person to merchant payment, right? Which is more of a formal. So we need to create enough merchant value proposition. What is merchant value proposition? In certain cases, there should be cash or taxes on consumables paid via cash should be more expensive to the customers. So there's a customer value proposition, right? To pull and use the digital channel, and that will automatically pull the merchant. For example, the credit card is a prime example of that. Right? I give that example all the time. The day the taxation was reduced on using credit cards and electronic means from 15 to 5% in Sindh province on restaurants, everybody started bringing out the credit cards. The consumer value proposition was created. Cash was more expensive. Therefore, everybody moved. That needs to be widened across all digital channels, including QR codes. Now, how it will happen, the moment we electrify, I would say, or digitize those transactions, we will be able to provide access to capital to those merchants then, who we are treating as consumers today, right? Their throughput will be visible to us, and based on their throughput, we will be able to lend. Even today, we do more than 60,000 loans a day completely digitally, right? We will be able to more than triple or 4x those numbers if we get the data on those merchants doing the throughput through digital channels. Will be able to provide access to capital, which is much required per the K-FIS survey, right? In order to grow their businesses. And that's how the circle needs to happen. The payments need to begin with QR codes or other electronic channels via consumer value proposition. and a merchant value proposition, followed by access to lending based on that data.
I think that's it. We do have a few more questions, but unfortunately, we're out of time now. So I would request the panelists of panel one if they can stay on after this and answer them in the chat.
Hasan, can I just very quickly add some?
Yes, please do, Mr.
It may be not efficient for your time management, but I need to add to this. There is it's a very serious question these days being debated in the press and I would say in the corridors at the FBR and Ministry of Finance and everywhere, that how do we need to incentivize? I'll just start from where Jahanzeb mentioned that the experience of credit card use or incentivizing credit card use through reduced sales tax has been quite positive. Now, that's one anecdotally that we see has been positive, but in terms of numbers too, if you look at the FBR collection, despite that the rate was reduced to roughly 1/3, the absolute collection from that segment increased even after adjusting for inflation and GDP growth rate. So what it meant that if FBR is interested in collection, you reduce the rate to 1/3 and still the collection is increasing. So you need, the important message from this is that you need to incentivize the customer demand. And the customer demand, either you can incentivize by reduction in the sales tax rates or by imposing a cash levy. So you make a cash, so that when the customer, on a marketplace has the two options of choosing for COD or for digital, and there is a penalty attached to COD, he goes for digital. Or if he shows up at a till, then he asks for a digital means of payment. So I'll just stop here. And I think there is a good step which Government of Punjab, at least from the press that we're hearing, they've done is that they have announced a penalty as well for all those merchants who will not be offering digital payment as one of the modes of payment. So this is something that we need to follow at the national level. Thank you, Hasan.
Thank you so much, Mr. Vikas. Now I will ask the panel to turn on their cameras and join us. So now I'd like to welcome Mr. Ali Akbar, who's Senior Manager, Research, Marketing, Communications here at Karandaaz, to moderate the panel discussion titled Closing the Gender Gap in Financial Inclusion and Building Financial Resilience Within Communities. Over the past 12 years, Ali Akbar has worked in various capacities in nonprofits, think tanks, and the government in both in Pakistan and Canada. He is also associated with the Pakistan Microfinance Network as Research Manager in the Ministry of Finance, Government of British Columbia, as a tax policy analyst. Our panelists for today include Patrick Riley. Patrick Riley is an economist, elite mathematician, and co-founder of Uplink, with over 30 years of experience in financial services. A recipient of the Malcolm Baldrige National Award, he has advised the World Bank, the US government, and the G20 on credit and economic forecasting. Next, we have Halima Iqbal, who's the CEO and founder of Oraan, Pakistan's first women-led fintech addressing the country's severe gender finance gap, when only 2% of women have access to credit. Next, we have Nagin Akhtar, who's the head of innovation at Bank Kalfala, where she leads the development and delivery of cutting-edge digital solutions to enhance customer experience and operational efficiency. She has over 2 decades of experience in tech and finance. She previously held senior roles at Illinois Microfinance Bank as head of IT engineering and executive director of product development. And lastly, we have Hussam, who is an associate director of financial inclusion at Innovations for Poverty Action. At IPA, he manages multi-year research initiatives focused on instant payment systems and affordability of digital financial services. He oversees projects in sub-Saharan Africa, Asia, and Latin America. Now I will hand this over to Ali to take us from here.
Am I audible? Okay, thank you, Hasan, and thank you to all 4 panelists for joining this very important discussion. Before I begin, I'd like to thank Samar Hasnain Saab and Umair Saab from SPP for joining this very important discussion. And there was this point that was raised by colleagues from the SPP about a financial inclusion index. So in the last wave that was conducted in 2022, Karandaaz actually compiled its financial inclusion index, which was based on factors such as access, usage, trust, diversity of use. So going forward with the data that we now have, we can certainly update this index and come out with new numbers and new sub-indices. And this is an opportunity for collaboration between Karandaaz and State Bank, and whereby we have very rich demand side data on usage patterns, literacy and behavior, and that can be combined with the supply side information on accounts and registrations that you have. So it would be very good to collaborate on this exercise, something that we've already initiated 2 years ago, and it's on our website for you to have a look at. So and before I start the panel, I will just set its context. So we will do a deep dive on the gender divide in financial inclusion. We will look at how financial services can be reimagined to empower women, not just as users, but also as decision makers. Because as we've seen from the results, the agency that they have is really low, and that has a knock-on effect on financial inclusion. We will also look at how the financial institutions can scale inclusive models. We can talk about things such as female agent networks or bundled services to create more trust and localized access. We will also talk about financial tools and safety nets that can better address real-world vulnerabilities that the marginalized segments face, like the healthcare shock that we had of COVID-19 and the climate shocks. Most recent one was the floods of 2022. I will turn to my first guest, Halima from Oraan, I believe. She has a hard stop at 4:20. So Halima, we'll start off with you. K-FIS shows that women's financial inclusion is just 14%, with many using accounts registered to male relatives. How can fintechs like Oraan better navigate these socio-cultural barriers while offering women account ownership as well as autonomy?
Thank you so much, Ali. Thank you for having me. I'm super excited to be part of this panel. This is a topic that's very, very close to the work that we do, and we've been in this space for now 4 or 5 years, really understanding the women audience and really challenging ourselves as well. How do you build for women in this space where they're so excluded, right? And to answer your question, I think there are a couple of things or 3 things that we've been very, very cognizant of as we build the product from a gender lens perspective. One of the first ones has been our insight that women's financial needs are no different than the men. Right? Their requirements are of being able to access credit, being able to have some savings, being able to make payments. But payments come very, very is probably the last thing that they think of to do digitally. The first thing for them is being able to understand how they can provide some kind of agency, some kind of contribution to their household. Women think very communal when it comes to financial services. So our insight in making sure that we're building culturally sensitive onboarding. And when I say onboarding, I'm not talking about the app designs or digital experiences. I'm talking about how do you communicate that message to them? What do they understand? What is their sweet spot looking like? What are the touch points in their lives where finance becomes a very important need, and for them to look outwards as opposed to inwards? And that's why us picking up a product that was so culturally, religiously, and widely spread in this country. And our research shows that 41% of the Pakistani population engages in committees, commonly known as Raskas, where it's actually an equal gender participation. The women are doing committees 1.3 times more than men, and a delta of 0.3 is where they're the treasurers. And why they're treasurers? Because people or men of their communities end up trusting women more with cash or more with money. So they become the treasurers of these committees. And that's why we picked up this product and started understanding what are the cultural nuances and how do you even build those digital experiences. So as we continue to build these products around women, it was, we don't want to provide them with bank accounts right off the bat. They don't care about bank accounts. And I'm being very honest here. For them, if they're getting their money, if they're not chief wage earners or any kind of earners within their household, having a bank account is not very counterproductive for them because it adds a level of inconvenience. They will have to go, if they're getting cash from their male counterparts to manage the house, they're getting it in cash, most likely. For them to go and deposit that cash in that bank account becomes very tedious. They're very immobile as well. So for them, having a product that makes sense, where it gives them a little bit of agency, a little bit of autonomy, and a little control over the finances was how we approached it. And that's where the onboarding of whether it is how do we do marketing, how do we build the experience, how do we even allow for those payments to come through was very insightful. So our decision-making process was, we'll meet you wherever you want us to meet you initially, when you're first getting onboarded onto the platform. But when it is about getting money from us, where we have the highest influence on you, we will make sure it is happening on the bank account that's under your ownership. So we shifted that behavior by teaching her about what is the benefits of having your own bank account, what's the benefit of doing digital payments, how can you do digital payments, what are the mechanisms, where is, what kind of fees are involved, are there any fees involved? So all those little things matter a lot, which means literacy becomes extremely important, right? And you can't do financial literacy to somebody who have time tax in a complete pure manner. You can't teach them about you can't hold workshops where they come, where you expect them to come because they don't have that kind of time or mobility. They're not very digitally savvy. They don't have that mind space. So the way to teach them financial literacy, and that's where the community validation and educational partnerships became really important for us, was by being very practical in their experiences through the entire, giving them the ability to maybe save a little bit more, maybe take a little bit more credit, maybe have that empowerment within their selves. The second thing that worked really well was gradual empowerment. So you can't, I'll give you an example. A lot of housewives are also micro entrepreneurs. But they will not identify themselves as micro entrepreneurs because business is very secondary to the first job that they have, which is of taking care of their homes. And when we started opening up that conversation and giving her that belief and that space that she is also a micro entrepreneur, it's not secondary, it's also attached to her occupation, she started becoming more and more confident in being able to take maybe some credit for her business. But how do you give that credit when she doesn't understand her P&L? So teaching her through different kinds of simulations, through different kinds of educational material, through different kinds of hand-holding has been a very interesting experiment for us, but giving that gradual empowerment to her. Today within our platform, 85% of our customers are repeat customers. They come back for more committees. They come back for second chance to just grow their portfolio and diversify. The third thing that works really, really well with women is community validation. So any kind of social thing.
If I could, that's a segue to my next question, because you've spoken a lot about how there's a community dynamic where women are concerned.
Yeah.
So, our report highlights that ROSCAs are still, the primary mode of savings, not only savings, but when people face credit constraints, they're drawing down on their the ROSCA contribution. I wanted to understand if this was a scalable model. You've built a digital model, but is it scalable without losing community trust and participation?
Yes, and we've seen that in different markets happening. We've seen that in Kenya. We're seeing that in Egypt happening, with the regulator getting involved and building regulations around it. With similar things happening in Saudi, where a regulator again getting involved and building really strong regulations around it, but keeping that community aspect of it. You have to also understand that the first time the customer is coming, she's coming from community validation, but eventually it ends up, so it's a multiplayer game to start with, and then it eventually becomes a single player game. And that's what we really need to be able to identify and build experiences around. Because eventually the customer is like, hey, what is my need? I'm going to come through my community, and then what becomes my need, and my need becomes first a primary to my community. Community is more used for peer pressure purposes, for trust building purposes, for having more of a support as opposed to pure financial needs. So you need to be able to separate these two, and you have to also understand that what is that community playing? Community is playing more from a user acquisition perspective, maybe from a marketing perspective, but at the end of the day, the customer cares about how much money can I raise and how much money am I able to save through these ROSCAs. So I think it is about identifying those solutions to be able to really focus on building digital experiences. You have to also now start thinking about how the community aspect is very important from a user acquisition perspective, but as the customer graduates and as the customer comes online, there will be a shift in that community as well. So being able to understand what that means is very important. And yes, today, even if we say that ROSCAs are, it's not inflation safe, there's so many other better options in terms of being able to do savings, there's stocks to think about, there are mutual funds to talk about. You're talking to women who don't have that mental space or literacy to be able to do anything other than what is culturally relevant and what is lifestyle relevant to her. And that's why ROSCAs work really well.
Excellent. I'll now turn to Patrick. Patrick, so I'll set the context for the question, but your organization uses data to solve important problems. And I first want to learn about what your organization does in this regard. I'll set the context and I'll give you the question as well. As per K-FIS 2024, only 14% of women have a registered financial account, and just 11% own a mobile money wallet. Traditional scoring mechanisms are unlikely, I think, to work for such low data profiles, especially in rural and informal economies. How can Uplink, your organization's alternative data approach, be adapted for markets like Pakistan, where women entrepreneurs lack formal credit histories or banking footprints? And what kind of data strategies have proven to be effective in exploiting the true credit potential of excluded segments such as women?
Well, first of all, let me say two things. One, thank you for having me here. It's an honor to be speaking here today. Two, I want to compliment the entire organization on the quality of this survey. I get to see a lot of surveys, but there's an enormous amount of thoughtfulness and quality of execution here. It really serves as I think, a model for other countries to follow. And so my highest regards to the entire team here. Regarding your question, I think it's important to keep in mind that this is both a process and it is both dependent on data and methodology. And the process really forms around some of the things that Amala already spoke about, which is this changing expectations and understandings of both the women and underserved segments, as well as bankers and other lenders. And so to some degree, we first look to what I would call low-hanging fruit or early opportunities that begin to change expectations and form an understanding of what is possible. We've been doing this now since about 2000. And so we have many, many years of investment in marketplaces like the Philippines and Bangladesh, India, throughout Latin America, Africa. And based on that experience, I would say that first, if we begin to think about what sort of data is impactful, I'm first going to focus on rural markets a little bit and talk about that very briefly, because these are sometimes some of the most extremely underserved segments that we find, and oftentimes areas where bankers are most reluctant to enter and reach. And so I would say within these marketplaces, there's typically a wealth of information that oftentimes goes greatly overlooked. These tend to be agricultural economies. These are economies that are being driven off of seasonal and weather cycles and so on. And so when you look at our models are less based on traditional credit formulations and more on business success. What are the underlying factors that drive a business's resilience? This is the ability to solve problems, the ability to overcome challenges, the ability to seize on opportunities, as well as then this overall opportunity to grow and thrive and multiply. And so when we begin to look at this, the foundation for that is the ecosystem around them, marketplace conditions, the ability to move product. Interestingly enough, this explains typically between 1/3 and 1/2 of overall credit risk. So if I understand overall crop productivity, economic challenges, the timings of those crops, the access to marketplaces, the other types of demand forces that may be going on, I'm already halfway there to a great credit decision. The next layer of that is to begin to understand and begin to see through not credit metrics, but business success metrics. Another thing the first speaker mentioned, which I think is very important, is this community connectedness. People who are both connected to their community and connected to a network of mentors have much higher success rates. And so what we do when we're looking for information from them is understanding these, what I would refer to as assets that don't appear on the balance sheet. These are non-financial success factors. Am I connected to people who are experts in a field? Am I connected to people who will give me good advice and sage advice? Am I connected with community that provides a support in an overall network where we can rely on each other to arrive at a conclusion? When we bring these factors in, once again, we reduce risk again. The next element then is looking for good business planning and foresight. And so this is the ability to identify factors that demonstrate they understand their industry, they're collecting information actively, and they are acting upon it in responsive ways. And so this gets to problem-solving capability. Sometimes this data can be seen in unusual sources. Sometimes when we think about mobile transactions, we may only be thinking about information that relates to transactional behavior, but it is really the patterns of data that we sometimes see longitudinally that demonstrates organization, it demonstrates formal structures, it demonstrates planning. The final piece I would say that is oftentimes very pivotal, and it's already been alluded to, is this concept of seeing a world bigger than myself. My goals and objectives are not only to satisfy my personal interests, but there are people in my life who are very, very important. And I'm trying to make sure their life is better, and is moving forward. So it is this commitment to a goal that is bigger than yourself. And sometimes these associations, memberships, groups, and so on help identify that, but there are other factors as well. And so when we bring all these things together, what we really have is a business success model, not a credit model. So hopefully that's helpful and at least starts the conversation.
Excellent. Thank you, Patrick. We'll turn to Sam now. Sam, you're involved with the Innovation for Poverty Action, and you've supervised a lot of demand side research. I'll ask you a question from an angle of female agency. So the survey shows that 16% of women participate in any kind of household decision making. And there are trust gaps with formal institutions. What kind of research methodologies can test ways to boost women's confidence and uptake of formal financial services?
Thanks so much, Ali. And thank you so much for having me. And congratulations on another round of the Karandaaz Financial Inclusion Survey. It's certainly very interesting, and I echo remarks made by other panelists. Sorry. So thanks again for this question. 16% isn't a very ambitious, isn't a great number, I would say. And while we don't have this exact statistic to measure against global benchmarks, we know from the Findex database that account ownership rates in low and middle income countries is at 69%, and this was 66% for South Asia. And this data was collected in 2021. So hopefully we're seeing more of this globally. But Pakistan's account ownership rate for women at 14% doesn't fare very well against that. So clearly there's good things we're doing, but some things we're probably not doing right, and there has to be a focus on that. And just in terms of the evidence that is out there, there's lots of work that's been done empirically to test the impact of financial services on agency and of women and building resilience. We know from this famous study by Tavneet Suri and William Jack in Kenya that digital payments can provide women with more privacy and control over their financial transactions and income flows, helping them reduce challenges that women face surrounding savings and investment decisions, and can also contribute to alleviating poverty. A study in India, for example, found that women receiving funds in a financial account and knowing how to use them have greater financial autonomy. And this starts actually shifting social norms held by men as well. And in cases where women are not subject to sort of family sharing pressure or sharing finances with other members in the family, they're able to expand their business as a result of access to finance. And obviously, there's the sort of well-known impacts of having increased financial autonomy on an increase in spending on education and food. So these are the impacts that evidence of the impacts that we know of, and there's certainly a lot of literature around this. Now, what RCTs, or randomized control trials, something that Innovations Poverty Action we try to advocate for, is that they tell us what is working and what is not working through measuring the impact of an intervention against the status quo. And in sort of Pakistan's case, or even the broader financial sector, RCTs are perhaps best designed in partnership with financial service providers who are on the ground and have insights on local populations and suitability of products. They've tested multiple products on multiple types of population. And when we started talking about sort of the broader concept of financial health, in which financial sustainability, resilience, agency, all of that comes in. These are sort of longer term. This is a longer term endeavor to be able to track financial health over a number of years. What I have noticed in looking at literature and moving out sort of outside of Pakistan and looking at other markets is that there is very less focus on this type of research in Pakistan. There's very less RCTs. There's very less focus on empirical research within the financial inclusion space. And what this does is that it takes us a little bit away from evidence-based decision making, and we want to move towards that ideally, to be able to design policies and interventions and strategies that we know will work and are scalable as well, right? So that is one of the focuses that I would like to sort of suggest and advocate for. And we are trying as an organization to work more in Pakistan. There is actually one study that we just completed with Easypaisa on merchant payments across 3 different cities, and we're running another study on merchant payments in the country as well. So I'll just stop there. It's okay.
Patrick, you have your hand raised. Please go ahead.
I think Assam makes an excellent observation, and that is we oftentimes refer to this as a design of experiments with financial institutions. How do institutions set up learning loops that help them understand best practice to be able to move forward? This is always essential. I talked about a process. Halima alluded to this as well as she was talking about identifying the steps to move forward. But excellence played out has to be both culturally relevant. It has to be able to take advantage of what data is available, but it also has to be organized in a way in which there is learning. The priority of learning, as well as the priority of financial success for both borrower and lender and participants in the space, are all essential. And when we do this well, what we oftentimes find is in underserved segments, we can oftentimes achieve underwriting levels, successful repayment and underwriting levels, as high as 65 to sometimes even as high as 85% of the population, specifically if we're talking about SMEs. But it's a process getting there, and I really appreciate his comments. I think they're spot on about this learning. Thank you.
Thank you, Patrick. I'll bring Nagin into this from Bank Al-Falah. We've spoken about agency and the community aspect that is very important. I have a question for you on literacy, and there's a certain privilege associated with a bank account as well, holding a bank account. So despite the growing need for credit, many people, especially women, remain excluded from formal borrowing due to barriers like, complex paperwork, and then documentation requirements and limited financial literacy. These issues are compounded, for women borrowers. How can commercial banks, or you can talk about Bank Al-Falah's experience, simplify credit access through more inclusive borrowing pathways that can address unique challenges faced by, women and marginalized segments?
Yeah. First of all, I would like to thank Karandaaz for inviting me and giving me this opportunity to talk on this forum. Very excited. Now coming to your question, I think Bank Al-Falah has been very focused on providing solutions which are technically very sound and which have a customer experience angle catered to. So for example, so we very recently launched a special product dedicated for women, which is called Agri Loan, which has been availed by 45%. So the overall number is so we have dispersed 211 million, and out of which 94 million was dispersed to women. And we are talking about rural women here. We're not talking about urban women. So the reason for such quick adaptability was that it's a paperless process. It's very, very seamless. There's no lengthy application forms that you have to fill in. It's instant fulfillment. So you get access to credit there and then within seconds, really. And then it's available 24/7. So I think one of the major reasons why women have not been able to access credit in Pakistan is challenges with commute, with them to visit a physical branch and have to go through the entire process on their own. It has been a challenge so far. And that is what we have tried to address at Al-Falah. So we've been trying to bring in products and services which are very, very convenient, easy to use for women. A very simple example, another example is where we brought in a special loan dedicated just for women. So to promote micro entrepreneurship. And I think one of the major reasons why Al-Falah has been very successful at digital is that we've provided remote access to financial services, basically. So these women can now, from opening an account to getting access to credit, to do payments, can do everything from the comfort of their households. So the biggest challenge has been sort of addressed. And I'm very happy to share with the forum that now 86% of Bank Kafila's transactions take place through Alpha app, which is the digital platform. So we've been very successful in migrating a lot of traffic from the branches to the digital channels. And it's same is the situation with our lending products. So we have a lending portfolio ranging from personal loan to overdrafts to credit cards to auto loan. We recently launched auto loans, so which has also been available to women, so with a discounted rate to agree to agent financing. Another very important angle to financing is that we've hired 7% of our agent network as women. And they've given access to credit, and they use credit, they run retail shops, and they do services for us. So I think we've been trying very hard to bring in women into the whole overall landscape and to give them access to credit.
Thank you, Nagin. Patrick, I'd like to bring you in again. So financial resilience was a key theme of this year's survey that we've conducted. And from the discussions early in the day, we learned that, and this is very disappointing, that the penetration of insurance in Pakistan is very low. Our survey shows that almost 90% of the population in the rural areas have faced some kind of a financial shock, but only 29% of adults reported an ability to raise emergency funds. Can you explain to me the role that alternative underwriting or predictive financial behavior models can play in strengthening household financial resilience or individual financial resilience for that matter?
Absolutely. I think it's a very important question. And oftentimes when we're looking at traditionally excluded portions of the population, the data oftentimes gets very thin. We look at your mobile penetration rates that the survey exposes. We look at the asymmetries that we see between information availability in rural market versus metropolitan and city markets. And this presents a very serious challenge. It is multiplied as we move into rural areas, oftentimes because income flows are much more irregular. You find less salaried populations, and so this creates greater volatility. So how do we deal with this, and how do we solve this? It's very interesting to me the clarity in the detail that we can oftentimes see if I ask somebody within an application. So the first mindset to have here is within highly automated applications that are very, very streamlined, we can achieve very high likelihood of approval rates and so on. Now I want you to shift your mindset into emergency situations. And the first thing we want to think about is you ask the question, why do you need these emergency funds? Actually using LLM and to help understand what is the nature of the request and the condition under which the request, the degree to which they articulate this clearly and formulate the problem that they're facing helps us understand risk very quickly. That's important, and those are very good tools to use to help begin understanding what's going on. The next thing we look for is the evidence of problem-solving capability. In other words, is they formulate it. So what I'm really talking about is you ask them for a little narrative. And as they describe that narrative, what we're then immediately able to see is not only an ability to articulate the problem, but an ability to demonstrate a planned and organized solution. We then also look for planning and structure in their lives. So, in earlier speakers, we talked about this idea that oftentimes, for instance, women are not only running a household, but they're also owners of SMEs or MSMEs. And this demonstrates a commitment and a plan and an organization around success. The next elements we then look for is this connectedness into a community-like structure. This is memberships of organizations, mentors, and so on. The final element then is the economic conditions with which they face. So, this is understanding the opportunity to thrive if they make it through this particular challenge or emergency they face. When we pull all these four elements together, typically what we're able to do is reduce down to a risk position somewhere typically between about 2.5% and 6%. Even most depository lenders can price around this type of scenario, and then it becomes very empowering. Most importantly, once you have been through this iteration, and this is a portion that Hassan spoke about, is now we have a better understanding. And as a lender, now stronger models can be built to create better predictions. So what I just framed is a starting point for lenders that actually get them to a loss profile that can be profitable, but then it creates a learning loop by which you can then further improve. Typically over about 3 iterations, we can actually get these loss rates down to below 2% consistently. And that's very, very empowering for the overall population. So hopefully that gives you somewhat of a framework in the starting point.
Yes, that was great. Nagin, I'd like to come back to you and would like to ask you a question on digital financial services. So your bank is very progressive. It has launched the Alpha app. It was one of the first banks to integrate with RAS, then offering biometric onboarding. So if you were to talk about specifics, which elements of your digital strategy have been most effective in reaching previously excluded groups, particularly women, rural segment, and the youth? If you can talk about specifics.
Yeah, okay. So I think the most effective strategy that we have been implementing since a while now to include people who have been previously excluded is to provide remote access to financial services. Again, I think one of the major problems in Pakistan is especially for women and especially for micro entrepreneur women is to visit a physical branch. It has been a problem since very long and was not addressed. So by providing remote access to these women, I think we've achieved a lot. That is why 6% of Alpha's overall transactions have moved to digital platforms. That goes on to show that if you provide the service where the people are, there's a need for sure. There's no denying in that. The women have financial needs, but those needs basically were not met. So the way we've met them is to take these services to the comfort of their homes instead of them asking them to come over to get access. The second is we've also launched a remote workly app very recently, which is an app dedicated to women and dedicated to people who were previously excluded from the financial services landscape. People with disabilities, people with other problems who could not move out of their houses and go to offices to work will be handled through this Workly app. What it does actually is let you view all the available vacant positions at Alpha, choose the one which is relevant to you, apply for it while sitting at home, go through the entire interview process and get hired too. And you get the offer letter while sitting at home. And then you can work from the comfort of your homes. So it provides not just the hiring opportunity, but also the opportunity to work from home. By launching this app, what we have done is included people who were previously excluded. For example, household women. They don't have 9 to 5 kind of time frame available at hand to come to offices to work. They can, for example, only work for 2 hours or 3 hours. So they can log on to the app, say that I'm available, I'm online from this time to this time, and they get paid for those 2 hours or 3 hours, whatever they can spare from their the busy schedule. Same goes for people with disabilities. So what this app offers is that they can work from homes. They can't physically come to offices to work. So by using this tool, we've tried to include as many people as we can. And one very important aspect is that we've been very forthcoming in educating people about financial literacy. By doing that, I think we've also included some of the older people, people in their 50s or 60s who were not who were not generally very tech savvy. There are some, because they can use WhatsApp very easily. So we thought that why can't they use a financial app if they can very easily use a WhatsApp for chatting or calling. So we've also included them. So we focused on them. We've educated them that you can pay a bill while sitting at home using a digital platform. So these are the strategies that we have implemented to include people who were previously excluded from the overall access to financial services.
Great, thank you. I realize we're running over time. Hussam, I have a quick question for you and would appreciate a brief response. So we've spoken about the gender gap in account ownership, and there's the majority population, more than a majority of population is not financially resilient. So given RAST and the instant payment system that we have, how can these two problems be addressed? What have you seen in other jurisdictions? I beg your pardon. What have you seen in other jurisdictions based on your experience?
Thanks, Ali. This is a very interesting question, and it's very close to my heart because we're trying to sort of measure the impact of instant payment systems across a number of markets. So, based on what Patrick was also saying, there is a landscape of climate suitable products and services. I don't want to call them climate smart because that is a sort of a different bucket. This sort of climate suitable products, they mostly are insurance, credit, savings, and payments, right? And there is evidence that these products are helpful in mitigating, adapting, and building resilience against climate shocks. But we also know there was a CGAP report a couple of years ago, and they scanned these products across a number of markets and found that I think less than 5% can be considered as climate smart products. And that's because when you move from traditional credit products or traditional insurance products to try to adapt them to a population which, for example, doesn't have credit history or don't have accounts, don't have usage histories, for example, it becomes difficult to design products suitably for the different types of populations, and based on the type of responses that different buckets of population would want to take as a result of climate shock. But then also these products from a supply side perspective carry a higher risk appetite. So financial service providers are not always very keen to intervene with a product like this after a climate shock, for example. And given Pakistan's situation where access to credit is generally very low anyway. So what instant payment systems can do is to reduce frictions in general sort of transactions, in account ownership transactions, person-to-person transactions, and person-to-merchant transactions. And the current evidence, which is limited, does say that it opens up credit markets. We know this from India and from Brazil. It can lead to an increase in savings as well, and it can sort of help individuals adopt more sophisticated financial products and services. So moving from just having an account to credit, insurance, and other products and services. So the key question is, now that instant payment systems are being deployed across a number of markets, and obviously Pakistan has its own instant payment system, can financial service providers now leverage the data that is being generated through instant payment systems, or the first initial impacts of instant payment systems, to move towards developing climate smart products and services that are both responding to the needs of populations, vulnerable populations, particularly women who are affected by climate shocks, but then also ensuring that these products are financially sustainable and therefore scalable at the same time. This is exactly the gap in research that we're seeing right now. And a lot of the research that has been done has been focused on looking at traditional credit products or insurance products and looking at their impact. But what we don't know is, how can you develop more suitable products that are financially viable from an FSP perspective and impact the financial health of women and vulnerable populations. So yeah, thank you.
Thank you. This was a very good discussion that we've had. And we've understood that, to build financial resilience in the face of climate shocks or to close the gender gap, we need interventions that go beyond account ownership. And, solutions must link financial services to real world needs such as healthcare, climate protection. Gender sensitive design has to be leveraged. And of course, the financial literacy has to be embedded within communities through which women are mostly, leverage communities to save. So with that, I'll hand it over to Hassan, and thank you to all the participants.
Once again, thank you so much for that wonderful discussion. And once again, I would like to request the panelists to stay on and, if possible, answer the questions in the Q&A chatter box. We do have some great questions over there, but unfortunately, due to time shortage, we can't take them on live right now. Lastly, now I would like to welcome Ms. Carol Benson. She'll be delivering the closing remarks. Ms. Carol is a global expert in digital payments with over 40 years of experience in designing technology-driven financial solutions. She co-founded Glenbrook Partners, a leading consulting firm in payments system strategy, where she helped develop faster payment systems worldwide. Her earlier leadership roles include managing director at Deutsche Bank, senior vice president at Visa International, and executive positions at Citibank and Bank of America. Ms. Carol, if you could join us.
Okay, hello everybody. Good afternoon, and actually I'll say good morning. I'm speaking from the west coast of the United States, where it is early morning. I'll keep my remarks brief. It's a pleasure to join you at the launch of the 2024 Karandaaz Financial Inclusion Survey. I'd like to begin by thanking all of the speakers and panelists, and to acknowledge the Karandaaz team and its partners for completing a decade of rigorous and meaningful work on this space. Over the past 10 years, K-FIS has become a cornerstone of evidence-based financial inclusion efforts in Pakistan. By relying on this demand-side data collected directly from people rather than from institutions, this survey helps us understand not just how many accounts exist, but how people actually use it. And that really is important to understand. This year's survey highlights both the progress the country has made and the persistent gaps. There's significant achievements that have been made, and as we've said, there are gaps. The main driver has been mobile money adoption. We also see significant trends in digital infrastructure. My career has been in working on technology-enabled digital infrastructure, and my involvement with Karandaaz came through my early involvement with the design of the ROST payment system. ROST is a world-class payment system, and it is gaining admirable traction in Pakistan, especially obviously among mobile wallet users, thanks to its speed, affordability, and growing awareness. According to the survey, 77% of ROST users cite speed as a primary advantage, and nearly half see it as cheaper than other options. However, despite these advances, important challenges remain. and they were rightly emphasized throughout today's discussions. First and foremost is the gender gap. This disparity reflects both access to technology and broader social and structural barriers. Tackling this requires a system-based approach. I won't go into the details because I think all of the speakers today went into this. Obviously, there are regional differences. It's important to note those as well. Another key message today is the shift from measuring access to focusing on value and usage. So you need not only, obviously, the accounts to exist, but you need them to be used. People want to not just transact, but they need to save, borrow responsibly, and build resilience. And that's a really interesting word, resilience in financial services. And what that means to different people is very different culturally in different places and among different segments of people. I found a fascinating statistic was that 85% of loans in Pakistan still come from informal sources, primarily friends and family. That's not necessarily a bad thing in some circumstances when people are under stress. Sometimes friends and family can be a very good source of financial needs, but when people are vulnerable in times of stress, that's also can be when predators can reach out and they can become victims. So there's a lot of work to be done there. So this is a global pattern. Around the world, we're learning that infrastructure alone is not enough. People need to see value in using financial services. They need to feel secure, supported, and understood. So we need to design financial systems that reflect people's real lives, not just their income, but their vulnerabilities, goals, and responsibilities. So I said that, I've worked a lot in infrastructure, but you need not just good infrastructure, but you need data, and that's what K-FIS has really provided us. I've had a data bias all my life. K-FIS is especially vulnerable with its national coverage, its gender disaggregated insights, and its consistent methodology, which allows us to compare over time and across regions. I think that when we look ahead, we have to continue to listen to the data. And I just want to stress that listening to data is really hard. It's easy to look at data and extract what you want from it, but to look at the data and really see what's there is hard. And I commend the Karandaaz team for doing an excellent job of that. I think going forward, the tools that AI bring is going to help us do an increasingly fine job of doing that. And so I look forward to the future iterations of K-FIS. So at Karandaaz, we remain committed to this journey. It is my privilege as an American to sit on the Karandaaz board. In addition to my expertise in payments, I hope to bring perspectives from my part of the world. I'd like to assure all of you that your challenges are not unique. In the United States, we also struggle with financial inclusion. The numbers are not the same, but some of the patterns are similar. While only 4% of our households do not have some form of financial account, over 15% do not have access to credit. And more importantly, as a general statement, people of color, women, and lower income people are often unfairly treated by our financial sector, even and especially by major financial institutions. So we struggle with very similar patterns. So in closing, I would like to once again thank everyone involved for producing and analyzing this important work. To our panelists and speakers, thank you for highlighting not just the opportunities, but also the challenges we must address. And to everyone in the room, Thank you for your ongoing dedication to building a financial system that is more equitable, more trusted, and more responsive to the needs of all Pakistanis.
Thank you so much, Karen, and thank you everybody for joining us, especially the participants who are in different time zones who made the effort to join us, and all the attendees. And on this note, I would like to end this webinar. The presentation and the report will be live on our website shortly, so do check it out. And once again, thank you so much. Bye-bye.
Thank you. Thank you very much.
Thank you, everybody. Thank you. Thank you very much.